Forex risk reward ratio. What is it? What's a good one? Let's talk about it. Ladies and gentlemen, this is Harvey from EddieOHarvey.com. All right, guys, today we're going to get into talking about Forex risk reward ratio. So what is risk to reward? You've probably heard about it, right? And what's a good risk to reward you should be having for your trades? So guys, risk to reward. So risk to reward is pretty much what you're willing to risk for the reward that you want on a trade, okay? So are you willing to risk $10 to make $10? Are you willing to risk $10 to make $20 or $30? That's what risk to reward is. So you are putting yourself out there to say, hey, okay, on this trade, I wanna risk this amount, right? And I'm okay with losing that amount, but in exchange for me risking that amount, this is what I want to make, okay? Minimum, or this is what I want to make maximum. So that's the cool thing about risk to reward. With Forex trading, you are in control, for the most part, of what you want your risk to reward to be. Now, when you're trading, it's gonna, on your risk to reward, this comes in terms of you setting a couple of things. The first thing is gonna be what lot size are you using? Lot size is gonna determine what that risk is per pip. Second thing is, how many of those pips do you want to risk on that trade to get, how many pips do you want to risk for that certain dollar amount to get to that, on the flip side, reward that you want? So this comes down to strategy, right? The amount of money in your account, okay? And then the trading style that you're using. For instance, the rule of thumb, if you've seen any of my videos, I've always said the rule of thumb is you want to be, when it comes to lot size, you want to be utilizing a 0.01 lot for every $100 you have. Say you have a $1,000 account, okay? You can do, if it depends on how many pips you're doing too. So let me keep it simple. You're doing a $1,000 account, right? Do a 0.10 lot. That's $1 for every pip, okay? So let's just say I wanted to do a 1-to-1 risk to reward on a trade I was taking, okay? And I'm willing to risk 3% of my account to make 3%. So my risk to reward would be a 1-to-1. I'm willing to risk, let's say $1, so I'm willing to risk losing $30, meaning if I'm doing $1 per pip, my stop loss would be a 30 pip stop loss. And on the flip side, I'm willing to make $30. So it's gonna be the same thing as far as my take profit. $1 per pip, I'm gonna have a 30 pip take profit. That is a 1-to-1 risk to reward ratio. Now you'll get some people that will say, hey, 1-to-1, that's cool, right? That's the bare minimum. Some people don't even do a 1-to-1. They say you should be at least doing a 1-to-2 or a 1-to-3 and so forth. Of those who don't even do a 1-to-1, they kind of reverse, where they might be risking a 2-to-1, where they might be, let's say, risking more than what they're willing to win. Now, I don't totally agree with that concept, but if you have a strategy that delivers at a very high consistency rate, then that's a situation to where you may be okay with it. So what do I mean by that? Yes, it can be flipped. You can be risking 20 pips and your reward will be 10 pips. So in that trade, same thing, $1 per pip. Let's say, hey, 10 pips, you're gonna win $10, but if you lose, you're gonna lose $20. Now, it kind of don't make sense. Just say you take 10 trades, and out of those trades, you're gonna win, you're averaging an 80% win rate. So if you figure if you win 8 of those trades, that's $80. If you lose 2 of those trades, it's $40 you lost. So now you're walking away still with a profit of $40. So if you're okay with that, do your thing. But for me, that doesn't sit well. I gotta have at least me a 1-to-1 or higher. Now, let me give you something while a lot of people will say, hey, doing a 1-to-2 or 1-to-3 is better, because it is. So here's how it breaks down. Let's take still that same $1,000 account, right? And let's just say you did a 1-to-1. You're risking 30 pips to make 30 pips at $1 per pip. Remember, this is based off of a $1,000 account. That's $30 you're willing to risk losing to $30 you're willing to risk making, right? I mean, you're willing to take for your reward that you make. So let's just say you take 2 trades, right? You win one, you lose one, you break even. Now, if you're doing a 1 to 2, you win one, you lose one. Now let's say on one trade I took, I made $60, right? And let's say then I lost the second trade, I lost $30. So I still walked away with $30 profit. A 1 to 3 is even better, risk to reward. You're willing to risk $30 to make $90. So let me give you a prime example of how powerful this is. Where, obviously if you have the patience for a higher risk to reward, the payout is going to be even better. So look at this example. So let's say you took 5 trades for the week. And let's just say you went 4 and 2 on those trades, but you were doing a 1 to 3 risk to reward, right? And let's say, I can talk in percentages, but for the sake of, I've been talking dollars, I'm going to keep it in dollars. Let's just say, hey, you won, you went, what did I say? You took 5 trades and you went, let's say you took 6 trades and you went 4 and 2 for the week. Let's do it like that. Okay. So 4 times 6 is what? $240, right? $240. And that's what you would have won. You won 4 trades at $60 because you're doing a 1 to 2. You're going for 60 pips instead of 30 on your reward. It's $240 you made. And let's say you lost 2. You lost $60. 240 minus 60, that's still $180 you made for the week. Okay? So on a $1,000 account, 10%, that's almost 20%. You grew your account. That's 18%. You still grew your account for the week. That's powerful, guys. That's powerful. Okay. So let's take it even down to a 1 to 2. Let's say on your 1 to 2 risk to reward ratio, let's say you still took those same 6 trades and you went 4 and 2. You still 40, excuse me, that was a 1 to 2. Man, I can't even think straight. That was a 1 to 2. Okay. So if it was a 1 to 3, those numbers would be even more. Okay. So a 1 to 3, you're looking at, that's $90 you would have won. So I gave you all a 1 to 2. That's what it would have been. A 1 to 2, you still would agree your account 18%. So a 1 to 3, you're talking about you're winning $90. So that's 90 times 4, $360 for the week you just won. Okay, $360 for the week. That you won on those trades, right? And you lost 2 at $30, which is $60. So you still made $300 for the week. You grew your account 30% for that week based off of a $1,000 account. Okay, but even with a 1 to 1, let's go down to a 1 to 1. Okay, so this is why it's important that you want to be doing at least a minimum of a 1 to 1. Even if you did a 1 to 1 using those same numbers, you won 4 trades, you lost 2. 4 times 30 is 120. Okay, you lost 2 trades at $60. 120 minus 60, you still walk away with $60 profit. Guys, that is still on your account. You grew your account by 6% for that week. 6% for that week, $60, right? That's 6%. If you did that for the entire month, minimum 6%, that's 24% for the month you grew your account. With your money being in the bank, no, you cannot. No, you cannot. For the whole year, our money only grows sitting in a bank account, literally almost 1%, not even a full 1%, guys. So now you're talking about, you're looking at those numbers, it's all about what you're comfortable with. Where do you want to trade at? Are you okay with a 1 to 1? Are you okay with a 1 to 2 or 1 to 3? What do you want to do? My sweet spot for me personally, I'm a 1 to 1, 1 to 2 guy. Just being honest. 1 to 3 is going to take a little bit longer depending on what it is. But that 1 to 1, 1 to 2, I'm good to go with that. Okay. And it depends on if I'm trading. If I'm trailing a trade in profit and I'm up, I can be up heavy where on one trade, I can win 10, 15% on the trade. And you can look at that and say, man, that's a really good week I just had on that one trade. So it varies per person. You have to figure out what type of trader you are, what works best for you based on your strategy. Are you a scalper, an intraday, or a swing trader, right? That's going to give you a risk to reward because typically if you're scalping, you're going to have a smaller risk to reward. Intraday, you're going to have a higher, and a scalper even higher. So if you look at a scalper, it may be like a 1 to 1. And then sometimes, like I said, it depends because it could still be if you're going for 10, 20 pips or whatever, that's like scalping. Intraday, which I consider myself an intraday, you're going like 30 to 60 pips, right? That's going to be literally, let's say, a 1 to 2. then maybe even a 1 to 3. But if you start doing like swing trades, you're looking at a 1 to 3, 1 to 5 and higher. Those are the type of trades where it's going to take more time. So figure out what type of trader you are. What do you want your risk to reward to be? What do you want to grow your account for the week? Okay, for the day, for the week. If you want to go for 2% per day, then you can know based off of that, this is what your risk to reward should be to help you get to that goal. All right, guys, so there you have it, Forex risk to reward. I hope you all got some value from it. I appreciate you guys. Listen, before you go, guys, I have 2 things for you. First, guys, is that I have a free cheat sheet that I want to give to you. Yes, a free cheat sheet, guys, where I talk about the 14 do's and don'ts of Forex trading, guys. I'm going to share with you 7 things you should be doing and 7 things you should not be doing in the foreign exchange market. On top of that, for each step, I have a in-depth, I have a close to a 40-minute audio that breaks down each step, and I give you a bonus 3-step checklist in addition to that. So guys, if you want to grab that, okay, you can grab that, guys, by going to, I have this video this inside my blog post, guys. Head over to my blog, go to eddylharvey.com/182, and there is a banner right below this video on my blog. You click that banner, guys, and it will take you to where you get the cheat sheet, okay? Second thing I have for you guys, the second thing, guys, is that, listen, the platform, everything I've learned about Forex has been through one platform. I've been part of this platform for 4 years, guys. And if you've seen some of my videos, you know what it is. But if you haven't and you want to learn more, guys, you can head over to my blog. You can head over to Facebook. I have a group over there where I give an under the hood inside look at this platform, where I talk about different things related to our platform. And I share with you all different trainings, tips, results that people are getting. So all of these things, guys, where you can learn from some of the educators that give snippets of that, a lot of very good value inside of there for those who want to learn more about our platform. Over 400,000 people around the globe are part of this platform, guys, and it's changing the lives of so many people and helping us with not only having strategies, but learning how to trade independently and being able to also utilize products to help you make money even when you're busy or new. So if you want to check that out, head over, guys, or simply go search Forex Value on Facebook and go to fb.tradewithed.com. All right, guys, so there you have it. I hope you all got some value, man. I went a little longer than I wanted to. I like to talk. I like to try to give some value. I like to give examples of things. And I definitely hope you all found this to be helpful to you. All right, so with that being said, guys, thank you so much for your time. I will see you all in the next video. Take care. Have a great day.